SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry, Lutz, and we're trying to help you evolve an investment philosophy or a means of prospering, or at the very least, not losing too badly in the new economy, or as some call it, the person you're about to hear from, the new normal. He's developed 3 most important rules of investing in the new normal. I'm talking about Jason Burack, Wall Street for MainStreet.com, currently under construction, but should be out again shortly. And Jason, welcome.
Thanks, Kerry. I'm always happy to be back and speaking with you.
Yeah, so came up with 3 rules. I think they're very rational. I think they're pretty easy to follow. I think any of you really can do it. So tell us about these 3 rules. Tell us why and how they work for you.
Sure. Well, a little bit of background first. I've read over 200 books, probably over 300 at this point, on business, investing, finance, Austrian School economics, entrepreneurship. I've also interviewed over 300 guests, experts from all over the world, different skill sets who've made money, either running their own business or investing in different asset classes. So this is just from piecing different bits of things together, their knowledge and my experiences as well. So looking at different sources and my own opinion. My number one rule, and I think this is the most important one, and this is going to make life difficult for people, Kerry, because most people don't want to check their investments that often, is unfortunately, though, I think politicians and governments can and will change the rules anytime they want, perhaps on a daily basis going forward. So I don't know if we're at the point, Kerry, where we're going to see rules changes daily, but we're at the point now where it just seems every 6 months or every year, the IRS or all these government agencies and bureaucracies, there's all these new compliance stuff, whether it's Obamacare that you have to comply with and so many other rules and regulations. And we're just going to see those for different investments and stuff. And it's not just, one asset class. We've seen Operation Choke Point announced recently where, as a small business owner, if you're in a specific type of business, whether it's a coin dealer or a retail gun owner or, even the porn industry, which is a very booming industry here in the United States, you have a whole bunch of extra compliance stuff and your bank's going to be hassling you now for extra compliance stuff, and they could drop you as a client and make it damn near impossible for you to do business in the United States. And, normally the thing is with these rule changes, Kerry, they normally in the past, at least, going back a number of decades, they didn't really happen that much in the United States. The United States was fairly consistent with its rules. It had a pretty good contract enforcement and things like that. It didn't change the rules nearly as much. You normally had this type of behavior in developing countries. So in countries where, there was enormous regime changes every couple years, where there would be a coup or, the military dictator would come in and seize control of the government by force and, take over the mines. And you'd have a situation in, a small little South American country or in Africa or in Asia or things like that, right? Where, it would be a good natural resources deposit, or there would be a booming consumer class there. And then all of a sudden the rules would change drastically almost overnight. And, this was called crackpot investing. And this is why many people in developed countries were afraid of investing in foreign countries. But now these types of rule changes, Kerry, they're starting to come, to Europe. They're starting to come to Japan. They're starting to come to the United States in very rapid succession, where I think we're at the point where there's a book out about this. I forget the author's name, but, we're unknowingly as Americans, I think, committing 3 felonies a day. So whether, if you're a small business owner or an entrepreneur or an investor, you may be unknowingly committing felonies that you're not even aware of, because there's so many rules and regulations and the tax code is so enormous that, you don't know what you're doing wrong.
Right. Hey, so just as an example of what you're talking about, Jason, just tell us something where you might have personally gotten tripped up, or somebody has gotten tripped up by one of these new rules or regulations here.
Well, I think the major one, Kerry, for most American small business owner is FACTA. If you own a small business and now, the economy is so interconnected and global, if you own a small business and say you're manufacturing your goods in China or somewhere in Asia or in Mexico, and your bank down there now, because you're an American citizen, has to pay all these extra compliance stuff. They have to be compliant, I think, with U.S. Treasury rules and all these other rules and regulations for the banks. and to prevent money laundering and the T word and all these other things that are going on. And I think the FACTA one's by far the most, because there's the amount of obviously the U.S. government is underreporting the amount of Americans that are giving up their citizenship, Kerry. But a lot of them are small business owners who are risking losing their business, either having to give it up or being forced to sell it immediately, because the banks, if you're a small business and you make $8 million or $10 million a year, you have banks in China, banks in different other countries. All these banks have to be FACTA compliant. That's an enormous headache for yourself and for the banks. So they've just dropped American clients, and you've seen a lot of small business owners say, you know what, I can't run my business. So either the government's forcing me to sell this. I don't know if this is intentional behavior carried by the government or unintentional, if it's just pure stupidity. But it's gotten to the point where a lot of small business owners are just saying, you know what, I want to keep running my business. I can grow my business. I can make more money, but I have to give up my U.S. citizenship now. There's just no other way for me to operate this, because the banks won't keep me as a client and compliant, and I can't run my business without having banks at these different countries and locations.
Right. So they've just basically said the heck with it and just getting out of it, huh?
Exactly. And I don't know if this behavior, like I said, is being done intentionally by the U.S. government or unintentionally, but it's creating enormous unintended consequences for the real economy, where it's just making it that much more difficult to be a successful small business person. I mean, it's really easy to create an online business, Kerry, as long as you don't manufacture a physical product and bring it in, because you can, at least as an American, you can do most of the stuff here in the United States, and maybe you hire a worker part-time from other countries to do some of your background work, some of your support staff. That's kind of virtual assistants, or we just hired an audio editor part-time from Vancouver to clean up our audio. But that stuff's fairly easy transaction. But I mean, if you're actually moving goods back and forth, and there's you have a manufacturing base there of value-added manufacturing stuff that you have to pay people through the value chain there, it's going to be very difficult to actually operate a small business. Obviously, the large corporations, they have the resources to comply with this, but these extra rules and regulations and red tape, they're going to hurt the entrepreneur. They're going to create a barrier of entry from people for actually, creating their own goods. Obviously, the online business for now, pure e-commerce business, I don't think is going to be hurt as much. But who knows what the rule changes are with the internet going forward?
Yeah, of course. We can only guess, right? We just don't know what it's going to be.
Well, if you listen to Mark Cuban, he thinks the government is going to try to regulate the internet like a utility, which then almost all the U.S.'s business growth is from e-commerce related businesses, where these businesses were created by entrepreneurs from scratch, whether it's an app or a new type of software business. Software as a service is very popular, or a cloud-based business, or a mobile app, or things like that. These businesses, if they regulate this, I mean, these businesses are probably not going to start. They're going to get killed in the cradle. They're going to get strangled in the cradle before they have a chance to grow and flourish and start creating jobs, and the real economy is going to suffer.
Yeah, I think you are correct. And well, maybe the government will come to its senses. Any possibility of this?
Well, I think the regular people may eventually start to wake up more and protest and things like that. But I really don't know. I don't think the government's going to come to its senses, Kerry. I think more people are going to have to wake up. They're going to have to understand what's really going on and what the government's really doing, with its bad monetary fiscal policies and rules and regulations and stuff. But because of rule number one, because I think the rules are going to change, and the market interventions and other interventions in the economy and in your personal life are going to be so great, I don't think people should go all in, the poker term, on investing in any one asset class or investing in only one country or company. At least some real diversification is important to protect against known unknowns or unknown unknowns. So that's my rule number two. I think it's at least a little bit of diversification. There's a lot of gurus out there, Kerry, and for a while, some of these gurus, like, they may be all in on physical precious metals. There was a lot of them, right, that were making their clients a lot of money if they are either trading precious metals, gold and silver from 2009 to 2011, or they were buying mining stocks, enormous sums. At one point, I was making 600% on some mining shares, and that's
Sure.
There were people making even more than that from 2009, 2011 if they picked out the right juniors. But putting all your money into that, doubling down or going whatever's working, right? Putting all your money into it just because it's the only thing working now is a very dangerous game. That even financial experts get caught in once in a while because there's pressure, there's career risk if you're a money manager, where if you're not beating the benchmark or the other guys are following the trend better, a trend that's actually making money, and you're not following the trend, you're risking losing your career and your job. So this is something that regular the retail investor who may not have as much experience as a professional, they need to know they need to know that they're not going to know everything, and they need to protect themselves with some type of diversification. So if rental properties are doing very well for you, it doesn't mean you should put all of your money into only rental properties and you're diversified, owning 10 or 20 rental properties in the United States. We don't know what the government's going to do if they do lose control. There could be rent control nationally. I think in the 70s, Kerry, during the stagflation, I believe Nixon was attempting to put national rules in effect for countrywide rent control. So it wasn't just in New York City or San Francisco or some of these other parts and areas. And in the past, in financial history, we've had clear examples in the Weimar hyperinflation where there was rent control and wage and price controls and things like that. So, obviously rental properties are a good source of diversification, provide good cash flow for people, but, only going into, maybe one city or putting all of your money in rental properties because they're doing really well right now, I don't think that's a good idea. And the same thing goes for putting all of your money into just physical gold, because we don't know what the politicians are going to do going forward. And if you do own a lot of physical gold, I don't think you should, if you have the money to do so, I don't think you should store it in just one country. I think it's extremely dangerous to store it in just one country. We don't know if there's going to be a windfall profits tax or mines nationalized in one or two countries or something like that. We don't know what the rules are going to be going forward, how desperate these governments are going to be just to keep, the electricity on and the lights on. We're starting to see in countries like Venezuela, where when the oil price goes down, there's electricity shortages, food shortages, water shortages, condom shortages, all these types of things. We don't know what's going to happen in a scenario where, maybe the Fed claims it's going to raise interest rates and it doesn't raise interest rates, or it does, maybe a quarter of a point, and then everything crashes, Kerry, and they're slow. And then, we have a couple weeks or a month or two where, the economic system, kind of like in 2008, it's not running smoothly. So we don't know what the rules changes would be in a scenario like that. And if you have all your money in one asset class and it's only in one country, and you were doing well in it and you think you're safe, these rules changes could just blindside you. And I think that's why diversification, at least a little bit, is important to protect yourself and from the known unknowns and the unknown unknowns.
On that note, when we come back, we'll talk about rule number 3 and how it all ties together into a strategy to help you not just survive, but thrive in this new economy on the Financial Survival Network.
FSN Radio. It's all about what's next.
Every week the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
The Financial Survival Network. It's all about what's next.
We are with Jason Burack, and he's talking about his 3 rules of how to survive and thrive in this new economy, in the new normal, as he calls it. And Jason, so what about the 3rd rule? And then please tie it all together for us.
Okay, well, the third rule is just coming up with a good plan of diversification, and that's just people should focus on creating as many possible income streams as they can from owning different investments and businesses to protect themselves, to survive and thrive whatever is coming in the future. Thanks to the myopic stupidity and rent-seeking behavior of parasitical central planners, politicians, bankers, government bureaucrats. I could go on a list of different types of people I don't like that are included in there. But I mean, the bottom line is, if you don't know how to invest in those asset classes, you need to educate yourself. So, or you need to partner with someone who has a good reputation as a business person, who will help you, teach you, and help you make money in those different asset classes, so you can be diversified and have different income streams. So whether that's oil investing and master limited partnerships, which, as you know, Kerry, you and me both like a lot, and those are on sale right now. Because the market basically just still hates oil. I think those are a good bargain right now, or those are other resource stocks paying good dividends, or once in a while you get a good bargain in the regular stock market, where a good consumer staples company maybe hasn't done anything in a while, like the stock has just stayed flat and everyone hates it, and you could pick up 5 or 6% dividend yield at a pretty good PE ratio, something along those lines. Although those bargains are not as many as they should, except in foreign stocks. But whether it's that or buying a certain number of cash flow rental properties, I think it's important to have a mix of these things. So, you have money coming in from different places, because if you do have money coming in from different places, 5 different places, 10 different places, maybe 15 or 20, it depends how much work you want to put in and learn yourself, or how much capital you have to invest, or what other skills you want to learn in order to invest in these asset classes well to make more money. Then you're going to be a lot more protected. And I think diversification is the best insurance policy most people have, because we could talk about what I like best, but the government could change the rules, or they can manipulate the markets, like I think what has happened in the currency markets, where the Russian ruble was attacked in a currency war. The US government and Wall Street attacked the Russian ruble currency. The US intentionally put pressure on the bond rating agencies to downgrade Russian debt. We've seen just so much intervention in these markets that no matter what the fundamentals may look like, government could do something behind the scenes. There could be an unknown. Even though, Kerry, you and me study markets and read and learn a lot, we don't know everything that goes on behind the scenes. So we don't know what the U.S. government's next plan is for sanctions on Russia, or sanctions on another oil-producing country, or what they're going to do with the Venezuelan government now, as Venezuela looks like it's heading to hyperinflation. I mean, the U.S. could go in there and effect a regime change and take over the government in 6 months or a year from now. We don't know what's going to happen, and so I think that's important, that people, focus on coming up with a good long-term financial plan and trying to stick to the plan, rather than, only chasing whatever asset class is working well for them right now and going all in on that asset class.
I think you have a great point there. You got to be diversified, multiple income streams, something you've been hearing about here at the Financial Survival Network for years already. That will help get you through real estate for sure. Definitely a good choice for you, but in selective markets, but because you got to have a place to live no matter what, and doing it the right way for sure, and other strategies, other skills. Look, how many people have so much crap in their house they don't know what to do with, right?
Exactly. And most importantly, Kerry, these 3 rules, when you diversify like this, people ask me about the inflation deflation debate, and I think we've discussed this on here. I think, the government wants controlled stagflation with financial repression and the wealth effect. In a perfect world, for the central bankers and the central planners of the world, they would be able to control the inflation rate and, do financial repression for 10, 20, 30 years out and keep things kind of in this type of new normal. But I don't think they're going to be able to do this. But if you stick to, rules number 1, 2, and 3, and you learn how to invest in multiple asset classes and make money in different ones, you're going to survive inflation, deflation, stagflation, et cetera, et cetera. If you study financial history and go back and look who survived, 1929, after 1929 crash, who did pretty well there, or who did well in the Weimar Republic and things like that, you can kind of piece together that I've kind of read back through financial history and seen that, you got to be diversified into different types of businesses and asset classes like this to survive inflation or deflation, because I think we're going to just see more volatility going forward. These market interventions, we had no volatility, I think, in most markets, Kerry, from, I think, 2013 and 2014, which was highly unusual. So I think this new normal is a lot more volatility going forward. Normally the currency markets don't move that much. A couple percent move a year, Kerry, is a big move in the currency markets, but we've seen enormous moves in currencies. We saw the Japanese yen last year, I think, move down almost 20% in barely 6 months. We saw the Russian ruble get absolutely shellacked, down 20% in, I think, maybe 6 weeks. So we've just seen enormous moves in the currency markets that just have not happened in the past. And I think this is the new normal with enormous volatility. And that's why people need to stick to these 3 rules I think I've come up with for diversification, because I think we're just going to see it's going to be a really bad roller coaster ride, a very bumpy roller coaster ride. It's going to be very scary for people. People could get shaken out, one asset class, they think they were doing well, and then, the asset class drops, and then maybe they don't have cash on the sidelines, or they haven't been diversified. And then, they need to learn discipline in order to stick with that asset class, with gold and silver and things like that. Because I think that's what's going on now, is we discussed this before, that these asset prices, right? We've seen just enormous asset price inflation. And, even in the bond market, which, normally the bond market, when the bond market is doing well, the Keynesians will say, oh, it's deflationary, right? The bond market's doing well because there's not any inflation risk, right? But I think there's just been so much global central bank quantitative easing, currency swaps, and financial repression. A lot of this inflation in the asset prices has gone into the bond market. It's gone into the stock market in the United States. It's gone into the real estate markets. It's gone into diamonds. It's gone into it's gone into antiques. It's gone into artwork. It's gone into these, rare auction house collectibles, where these things seem to be setting records every month now.
And great point. So really, you need to be aware of this. And I guess you can find out more. Jason, best place to find out more information on this? You did a YouTube, if I'm not mistaken.
Our best. We have a YouTube video up about this where I just read off the rules more. That's on our Wall Street for Main Street YouTube channel. You can just type Wall Street for Main Street, WALLSTFRMAINST into the YouTube search engine.
All right, and hey, while you're at it, check out our website, financialsurvivalnetwork.com. Anti-mainstream media at its finest. We've got articles coming from hundreds of different sources all over the world. Stefan, our webmaster, spends hours a day getting that information, putting it there for you, articles that he's carefully chosen that he thinks you're going to get the most benefit from. And don't forget, take a look at that that federal investigation of the 10 largest banks in the world who are supposedly rigging precious metals markets. So much is going to happen from that. Happy April Fools, early April Fool's Day, if you believe that one. And make sure you sign up for our mailing list. And hey, we'll have you on again soon, Jason. Be well. Thanks so much.
One more quick point before you let me go, Kerry. We have a dividend stock report that your listeners may be interested in. If they want to email us at wallstreetformainstreet@gmail, that's WALSTFRMAINST@gmail, they can get a discount for when the report comes out. Since your listeners, I want to make sure that they get good information.
Oh, yes. Forgot about that. So, yeah, definitely you want to keep an eye on that dividend report that Jason will be putting out. And again, Jason, thanks so much.
Great. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.